Session open. Today is July 13, 2020, and my name is Alejandro Zambrano, the Global Chief Market Strategist with ATFX UK. So this is our weekly market update, and over the next, 20 minutes, we're going to talk about the markets, talk a little bit of what's moving, and a little bit of what we can focus on this week. So let's dig in, and this is the agenda that we're going to be focusing on. So macroeconomic update, week ahead, and then we're going to take at major currencies, indices, gold, crude oil, and cryptocurrencies. Before we start, as always, I need to stress that financial markets, unfortunately, is high risk, and we may lose all of our invested money. Retail traders trading with ATFX, which is the broker I'm representing, 67.07% of these people lose money. And there's a good number of reasons why people do lose money. And firstly, they don't have like a defined strategy on how to trade the markets. And it's not just about finding a strategy or having a strategy. It's actually about finding something that makes money. And it's not very easy because people are not going to give you like their strategy, complete strategy to make unlimited amount of money. And what happens here is kind of interesting is that you can have a strategy that is good, but it's not necessarily easy to follow. And that's the other pitfall with trading, like where you need to be at least mentally ready and prepared to actually trade, because many of the systems are difficult to follow. It's not something you can guarantee that you're gonna have a profit by the end of the year. So that's one of the reasons. We have a ton of educational content about that you can learn more about here on this on the ATFX YouTube channel that we're working with right now. So who am I? Why should you spend the next 20 minutes with me then? Well, I'm the Chief Market Strategist with ATFX. I'm also lead a team of the website called investingcube.com, a website I created to produce analysis and research to support traders in their investment decisions. You can check that out. There's more content there, more articles that can hopefully help you guys to understand the markets better and hopefully trade better. Before this, though, I was also working for one of the world's biggest brokers, and started out like a junior analyst, but then became the head. And actually, I created my own London research team over there, and I managed a few people in the UK, but also in the US. And probably the more important thing here is that I've been trading since 2016, and I reached a profitability in my trading after a few years. And I can hope you guys to hopefully not repeat the same mistakes I did. What else? We do produce premium content, education content. This is obviously just a bit of a free intro. Obviously, it's useful, but we have more educational content if that's what you're looking for. You can always just reach out to me via AlexFX00 as well. You can email me at alejandro.zambrano at ATFX.com, and you can also find information on InvestingCube. That's what I wanted to say. So let's move along here then. So remember this one? We showed you this one last week. It's the NASDAQ 100. The market had risen from this very low to this very high. The market had risen by 7% 2 weeks ago. Well, look and behold, this is what happened. The market did not come down. Instead, the market just rose and added another 5.7%. These are like really good times to trade. I know that the markets and the rest of the world is sort of not doing too good, but trading is one of these things that work really good when there's turmoil. Why? Because many times when it's clear, you have COVID-19, people sell, and then when you sort of figure things out, you say, well, actually, hold on, maybe the market moved too low, and now all the central banks are pushing a humongous amount of money into the system. Then obviously suddenly it's time to buy, and this is really the best thing we know as traders. We need to have market movements when everybody's making money and everything is super nice and easy. It is possible to make money, but things go so much slower. So it is really the best time now, and it's not going to last forever. Like 2021, it's not going to be the same as this year, because by 2021, hopefully COVID-19 and everything will be over. We'll have maybe a vaccine, and the markets like the S&P or NASDAQ is up with 65% from its lows. It might do 100%, but it's not going to do 200%. So it's not going to be as good next year, I think, as this year. So what happened last week? Let's give you guys a bit of a macro update. Unfortunately, we have new record amount of COVID-19 cases in the US, all right? And unfortunately, the deaths started to trend higher. So we talked about this. This is COVID-19 cases soaring, and over the weekend we had several sort of new all-time highs here in the US data. And I've been talking about the death rate going upwards, and unfortunately that has happened as well. As you can see, we're in a nice downtrend. So overall, we had just less and less people dying despite new higher cases. And what happened last week is that we ended this downtrend, and we're now going upwards. So this chart, you might remember, I showed you one this in the past. So this is my estimation. So I already did this 2 weeks ago, and I estimated that ultimately we were going to go upwards. We have gone upwards, but we're far away from around the 2,142 cases that I anticipated. But there is a strong likelihood, unfortunately, that new deaths can increase in the US, because what happens is that you can fill up hospitals to a certain amount, but then afterwards you can't, because there's just too many people there, and this grows exponentially, and that is the big issue here, that unfortunately the US might be forced to shut down. And remember what happened at the last shutdown? Stock markets tumbled just ahead of that. Now though, they're going upwards, which just makes things a bit confusing. So what is supporting stocks? Like, why are people actually buying? Well, last week we had the ISM non-manufacturing index that printed 57.1 versus 49.5 anticipated and 45.4 prior. So this is a solid little number here, showing you massive growth in the service sector. Now remember, if you go from being shut down to suddenly open things up, of course it's going to be a situation that your numbers are going to look amazing. The same way when you went from working hard and then just shutting down everything and the number looks horrible. So the markets are doing the same mistake now as they did on the way down. On the way down, everybody was terrified and panicky, like the world is going to go under, we're all going to die. And now the markets are going upwards, and they're like, oh, this is like the heydays. So people making the same mistakes. So we need to be mindful about that. But the data has undoubtedly been good. So you have ISM numbers being good. And remember the week before that, last Monday, we talked about the Chinese number being good, the known for payrolls being better than expected, the ISM manufacturing being better than expected. And remember 3 weeks ago or so, we talked about the European numbers being solidly good. And in Europe, things are opening up, things are going better. They have the thing under control for now. But unfortunately, in the US, things are going in the wrong direction, and they might and most likely gonna be forced to shut down as the number of deaths, unfortunately, pick up. And that could create opportunities with maybe stock markets coming down. But for now, markets are focusing on all this data. But again, this data is so backwards looking. It's so backwards looking. On the way down, so on the way down with the S&P 500, down here, there was information, of course. We knew what happened in China, right? So we knew what was happening. And we saw this sliding and sliding and sliding. And then here in March, also, we received all that very, very bad data. But I said the stock market is moving ahead of things now. And indeed, we went up. And now we're seeing all this good data coming out. And again, it's backwards looking, because the stock market has already told us that the data was going to be good. But for now, people are buying it. And they're forgetting, the same way as we didn't really talk so much about COVID-19 here when we slid to the downside. There's not too much talk about it now, but if it does go ahead and we do see another shutdown, then we will have problems in the US and in stock markets. So what can we focus on today? There's just a few key points. I think we can focus on this, which is the UK GDP. That's out on Tuesday. It's, again, backward looking. People don't really pay too much attention to it, but it's going to be written about in the press. Bank of Japan is not going to do anything. Bank of England Bank of Canada rate meeting, that could be interesting, but I'm not going to be focusing too much on that. What is interesting from a trading perspective could be New Zealand, CPI, and you have as well Aussie employment numbers. Those are solid numbers. And then the ECB rate meeting. So that's where I will be focusing on. UK GDP, Bank of Canada rate meeting, New Zealand Consumer Price Index, and you have Aussie employment figures and ECB rate meeting. You have UK labor market data and all of that, but it's not really super important or moving the markets massively. But they're out there, so you're aware of it. OPEC Plus, they're going to lift production by 2 million barrels, looks like it. On Wednesday, they're going to have a meeting, and it's quite likely that they're going to do what people anticipate. So it's not going to be it's not going to be a game changer. So you have some activity, ECB rate meeting, even if they don't do nothing, sometimes the market goes up aggressively and goes down aggressively. So you need to be paying attention to this. All right. Let's take a look now at some of the markets. So you have your Euro versus the USD, which unfortunately, much like many of the other markets and currencies, unfortunately, is a bit difficult to deal with. What's been easy to deal with has been gold and silver. So let's take a look at the charts now. So you have the Euro versus the USD. You might remember I was bearish, and we had a bit of success on that. We talked about this slide that worked out good. This slide as well. Not from the very high though, from here somewhere. And then we had a few moves to the downside, but then the market moved upwards and it got me stopped out, as you might remember. And then I turned bullish and then went down and it traded below the trend defining level. So now that failed as well. So you can't be bearish and you can't be bullish. And that's an indication of a market that doesn't know where it wants to go. Now, right now, you can't deny that there's a little bit of a bullish uptrend, but looking at it from a big picture perspective, we're not going anywhere. So I wouldn't get too excited. It might go down a little bit to maybe 1281 or something, but ultimately, I think we're going to trade upwards. And I'm not going to force this. I don't think we should force it. So let's be very careful. But again, there's a bit of a bullish bias about 1252. Here is the price of GBP versus the USD, and we talked about this market going upwards. We missed this entry, but I think we nailed this one good, and we did go up to the high, so that was a good job. And then we said if we take out this high, we can probably go upwards, but we didn't. Now the market is coming back under a bit of pressure, and I do think there could be a few stop loss orders here, and people that bought here are probably under a bit of pressure. I think we can go down. We can probably slide a bit lower, but as long as you trade above 125.06, I see no reason to change the bias. Dollar versus the Japanese yen, as you might remember, was bullish from these levels. We traded below the trend funding level. That did not work out. That was a failure. Looking at it from a big picture perspective, we're not going anywhere. And I think we just need to let this market cool down. I mean, it's already cooling down and will cool down further, and that's why I don't want to focus on it. So I would ignore it for now. There's no reason to bother. It's going to consolidate between 105.99 and 108.17. Have the Aussie versus the USD. The market is slowly trending upwards. A bit like the Euro USD, it's struggling to trade upwards. And in fact, actually, these currencies are doing a better job than pricing in the situation with COVID-19 than stock markets are. I don't have a very strong view, but the trend is short and bullish above 69.18. We might go down a little bit and then push upwards again, but I wouldn't get too excited until we either take out this high and there's the alternative. And if you look at the headlines and people suddenly start to get really worried about COVID-19 and we have a slide from here to here, then that could be interesting. New Zealand dollar versus the USD is short and bullish about 64.96, and this one I'm quite happy to stick my neck out and say that people are probably going to be buying between 65.31 and 64.96. Gold. Okay, guys, so I don't remember exactly what we said, but I haven't really altered these charts since we talked last time. And the idea was to buy. I mean, I've been a buyer for quite some time. We talked about the breakouts here, so things have been going okay. And we're looking for these dips. And we dipped a bit lower, it's going upwards. It's up with 0.5%, so not as much as silver, which is what I'm holding myself. And I think if we do go down to 17.93, I think people are going to be buyers. Of course, the market is not pushing upwards, but we don't want to be buying into highs. Look for a pullback. Just look for a pullback. Like I was long silver. Let me show you what happened in silver. I was long silver and I bought on the breakout and the market was going up and up and up. And then suddenly we have a strong decline, and whatever I bought here was almost a break even again. And then we went upwards again. I think what I want to say here is that it looked like the market was invincible on the way up. And right now we're here in silver at 1911 and it looks invincible. It's not going to come down. But guys, it will probably come down. If it does go down to 1883 or something, between that level and this level down here, I think people are going to buy again. You just need to be patient and you need to be ready for it. Let's take a look now at the Dow Jones and see if we can load that. So the Dow Jones is, we talked about buying here, and that worked out fine. I think we did, if you did put your stop loss exactly where I told you, you would have probably been stopped out, especially if you have a broker with wide spreads. But if you put it slightly below the level, and there's nothing wrong sometimes adjusting things as you see them, just pushing down a little bit, but not by much. You don't want to have a situation where suddenly you have bigger risks than usual. But if you would have done that, then this would have been good, because we said look to buy around these levels and then for this to go up, and we did obviously go up. So pat yourself in the back if you did that, because it's a good trade. I will close that now, right now. Why? Because you have one high, two highs. This whole thing is just a major resistance, and I think there's a situation here where if we don't take this out, we're gonna go back down again. And if we do go back down to these levels, 25,854, I think people are gonna be buying again. What's also interesting is this: you have yourself a head and shoulders. Let me see if I can show you that. You get yourself a head here, and then you got the left shoulder, and then you have the right shoulder here. So we haven't taken out the neckline though, which is up here. But if we do, then you know exactly what needs to happen. We have as well the S&P 500, which again, if you had the stop loss exactly, I think actually here you would not have been stopped out. Here you have an ascending triangle. We triggered the breakout, had a strong correction, but then we made it out. We made it out alive, and we're going upwards, and it's looking good. This pattern itself gives us a target of 5.5%, so I would stick with this one. And then you have the German DAX, which I think this one did slide below our trend of funding level. There's not too much we can do about it. If you got stopped out, you got stopped out. I was long the French stock market, and I got stopped out, and that didn't work out. But I'm long silver, and that covers more than what I lost. And that's when the risk-reward ratio again becomes important. And here I'm just going to remain bullish about 12,392. And yeah, we might come down, but I think people are going to be buying, and then we're going to go to the upside. Okay, good. Let's see if you guys have any questions. I didn't announce that we were going to go live today. So I'm not sure if we have too many questions, but if you're there, it's always nice. You can always say hello as well. I'm using a new microphone. Let me know what you think, if it's better than the other one or not. It's supposed to be better audio, at least if you look at the price tag. But you know, you can always set up things badly. All right, in the chat box, we have Stefan. And he asked, can we take a look at Tesla stocks? Yes, we can do that. And Vincenzo as well, good morning to you. And we have Marvin as well, good morning to you as well. And we have Maurizio, good morning. Good, so let's do that. And as well, Stefan, I'm going to show you something. We're going to take a look at dollar CAD first. So you have all COVID-19, right? All of that is driving things to some extent, and I assume some not. But look at this. Dollar CAD, inverse head and shoulders, or normal head and shoulders, possibly. Head, left, and right. And then you have your neckline. 34.79 will trigger that. It goes against the whole thing, COVID-19. But the dollar is weakening massively. And yeah, the charts are telling us to be sellers. On a break to 134.79. Tesla, let's take a look at Tesla. All right, so this is some analysis I've done in the past. We were looking for a bit of a pullback, but didn't go low enough. Wow, I don't follow stocks usually because they don't usually move this much. 74% move. All right, let's see here if we can. All right, so it's obviously like a massive move. So I remember this one. Head and shoulders, head, right and left shoulder to some extent. break here, reach that target. Now this is where you need to ask like some Elliott wave guy or some guy that's really much into, I mean, I'm into geometrical patterns. I guess we could treat this like we can't treat this like a triangle. Yes, we can. Let me see if it's the same now. So we can actually treat this like a triangle. So what we do is that we just extend this like that, and then this suddenly, actually it's gonna be the same, exactly same target actually. You're gonna have the same target here. The only way would be if you take the base, and it will give you something like this, which we also extended above. So obviously this is up massively, and I would not be buying here. It just moved up too fast, too quickly. I mean, it moved up too much too quickly. Here, you know, you have some people like on Robinhood, which is this new broker in the US, and people just going all in here. And you know, if you can ride this train, but I don't think it's as easy as people try to portray it. And yeah, it's like the new Bitcoin, I guess. So if you look at it from a big picture perspective, you need a pullback to 1,300, 1,227. You can, of course, you can always just focus on the very short term, and I can let you do that as well if you want to. And the very short term, even here, is a bit too aggressive because you have that fast move or this consolidation and that breakout. And if you take fib from the very low to the very high, then maybe a 50% correction to 1429, and then from here let it go up a bit. So that is what I will be focusing on. Maybe let it down and up if you want to ride this to the upside. All right, thank you so much, Maurizio. Maurizio says the audio is good now and was good before too. All right, good. All right, I don't have any more questions, so I'm going to wrap things up. If you do have any questions during the day or just during the week, as always, you have my contact details here. And as well, if you're watching this for the first time, don't forget to to subscribe. And as well, guys, anybody that's watched this a few times or the first time watching it, don't forget to hit that like button. Have a great day, guys, and I hope to see you guys soon. Next update should be on Thursday. Thank you so much, and talk soon. Bye-bye.